Hi, I'm Patu from freefincal. Parag Parikh Arbitrage Fund is currently in its NFO period. Let's discuss who should invest in this fund and who should not. So, an arbitrage fund essentially tries to benefit from price differences between two different segments of the equity market, the cash market and the derivative markets. As an example, there can of course be arbitrage opportunities in currency, in bonds, in commodities, and so on. But the primary source of revenue for most arbitrage funds is in the equity segment, in the cash market, the spot market, and the derivatives market. I have talked about how these funds actually work in detail in previous videos, so I don't want to get into that here. But let's talk about the basics that investors need to know. So, from middle of 2018 onwards, these arbitrage funds are classified as hybrid funds. Earlier, they were pure arbitrage funds, investing only in about 10-15% of bonds. But now, up to 35% these funds can invest in bonds. So, these funds can be subject to credit risk and interest rate risk in the bond segment. The reason why the bonds exposure has increased is because the arbitrage opportunities in the market has come down gradually, probably because of higher, exposure to the market, more number of participants, etc. So these funds have a volatility, that is the NAV fluctuations, which are typically like um, a short-term debt mutual fund, like a ultra short-term fund or a money market fund and so on. But in case there are credit events in the bond category, then there can be a huge unknown risk. So minimum 65% it will be in arbitrage opportunities, arbitrage uh, deals made between the cash segment and the derivative segments, and therefore the returns will not be very high. So the risk is commensurate with the volatility will be commensurate to that of a short-term debt fund, and therefore the returns will also be more or less similar to that of a liquid fund, money market fund kind of thing. So you can't expect too much money, too much returns from an arbitrage fund. Why do you need an arbitrage fund? I can think of three reasons. One, a retiree with a lot of corpus wanting to generate some kind of income from an arbitrage fund. A person, whose goal tenure, who has been investing for a long-term goal, but the goal tenure is nearing, so he wants to shift money from equity funds to arbitrage funds. Because arbitrage funds are taxed like equity, the taxation is overall lower. So you get debt fund like returns, but equity fund like taxation. That is the basic advantage of an arbitrage fund. But it comes with its own risks. For example, if there is a lot of redemption pressure, then the fund manager will have to sell the arbitrage opportunity midway. Then it will be subject to its own supply and demand forces and so on. And also, when the market is very turbulent, when there is not enough buyers to push the market up, then again the arbitrage returns will suffer, and the fund will give poor returns. It can even give negative returns up to a month, or even sometimes up to a quarter it can give negative returns, so you have to be careful. Usually these arbitrage funds are sold to high net worth individuals as a tax attractive option instead of liquid funds and other fixed deposits, etc. So it can be used like that as well. You can put one component of your emergency fund in an arbitrage fund. So it can be used as a short-term holding as well, but you must understand the risks. One thing that in the after the SEBI regulations that I don't appreciate in arbitrage funds, including the fund that I hold, ICICI Arbitrage, is that these funds buy direct plan debt funds. They buy the short-term debt funds in from their own AMC, and call that as part of the bond allocation in the arbitrage fund. This is unfair in my opinion, because the arbitrage investor has to bear the expense ratio of the debt fund also. So I am hoping that Parag Parikh AMC will not do that. It has got two debt funds, the liquid fund and the conservative hybrid fund. I don't think they will buy any of the conservative hybrid fund units in the arbitrage fund, because the conservative hybrid fund is a long-term debt fund. Usually they don't do that. But I'm just hoping that they don't buy the liquid fund in the arbitrage fund. That makes no sense. I'm sure, fairly sure that they won't do it. But I hope I'm not proved wrong. Also, you can trust the AMC to not take too much of credit risk. After the Franklin episode, most funds today don't take credit risk. But Parag Parikh Liquid Fund has always been credit wary. So I'm assuming the arbitrage fund also will follow suit. But other than that, if you look at the existing players, there's nothing special about the Parag Parikh Arbitrage Fund that you should go and invest in that, leaving alone the existing players, assuming you actually have a need for a arbitrage fund. So, that's all I have to say about it. But assuming you do have a need, what I would recommend is you if you like the AMC, naturally I also like the AMC, but if you like the AMC, wait and watch. Let's look at the portfolios for a few months, and then you can invest. There's really no flaming hurry.